What's up, guys? Welcome back to another video. Happy Sunday. A little bit too much in the sun for me this weekend, but that is not going to stop us from reviewing some trades and reviewing some charts. Today, we're going to go ahead and review my trades from last week, making over $86,000 last week, a fantastic week for me. And I want to review some of my best trades and a few of my worst trades. We're going to look at some of the good ones, some of the bad ones, and just overall review last week, try to learn from it, try to educate you guys, and just go ahead and break down the strategy, what I saw, why I took trades. I hope you guys do enjoy this on a Sunday evening. We're going to review some trades, and if I feel like we have some more time at the end, if the video's not getting too long, we'll throw in some technical analysis on the overall market to prepare you for the coming week. Of course, if we don't get to that technical analysis, you know where to come every single morning here on YouTube, live at 8 a.m. Make sure to tune in every single morning, completely free, for some pre-market analysis. Hope you guys enjoyed today's video. Press that like button, subscribe. Let's jump into the trades. All right, guys, so this is straight from my E-Trade account. You guys can see I can actually refresh this screen and everything will show up. This is refreshed as of 3:04 p.m., which it is right now. You can see the realized gains, about $73,000 for the week of last week, October 7th to October 11th. A little bit of unrealized gains still in the portfolio, so that's why I did say the $86,000. We'll have to see how those trades end up, and I'll try to talk a little bit about those. But you can see this is every single trade I took. I can move this around. We can go from Wednesday to there, right? From Wednesday to Friday, that was 40. We can go to 8th to the 11th. I can move this all around for you. And we're going to go ahead and really sort of tune in to this week. That is every trade I took. NVIDIA, Apple, NVIDIA, Broadcom, Meta, Qs, SPX, Qs again, NVIDIA again, Amazon, Tesla, Costco, AMD, and TSM. You can see the largest losers down here were TSM, AMD, Costco. The biggest winners, NVIDIA, Apple, and NVIDIA again. You can also notice the difference between the wins and the losses, right? And this is the key. Those wins, very nice, chunky wins. Those losses, paper cut losses, keeping it small, and knowing when my game plan and my trade is incorrect. So today, what we're going to do is we're going to review some of these trades. We're going to probably ignore some of the middle trades here, just focus on some of the big ones and some of the losses, and try to provide some education, some value. That's really the goal here. I hope you guys do enjoy the video. So guys, with that said, let's go over to TradeZilla, which does include some of those unrealized wins. You can see that number, $86,000. Some of those open trades, Broadcom, Microsoft, Apple, and Amazon. Those are 4 open trades that are still here. But I want to use TradeZilla to review these trades because I think the statistics, the visuals are much better, and that's why we're going to do that. So you know what we're going to do? We're going to go ahead and kick this off with the losses, right? Let's look at the worst losses, and then we'll jump into the wins. So if you want to look for the losses, let's start there, and then we'll jump into the good stuff. We can point out some really good numbers from last week. The profit factor of 9.8, which is great. Trade win percentage, 64%. And the average win to loss, you can see my average win was $8,700. My average loss was $1,600. So very good statistics last week. I'm very happy with how I traded. Let's go ahead and break some of these down. I want to make this very clear. This Tesla trade, guys, I still throw out some YOLOs here and there, so I want to make that very clear. You can see the size I used. I used 2 contracts. This was a little Tesla Robotaxi YOLO, so that's that trade. I'm just going to get that out of the way. It was just a nothing trade. I talked to the group about it. I said, hey, I'm going to throw some money. I'm going to throw $1,000 on this. So let's see what happens. I do still throw some YOLOs in there once in a while, but you can see that is not with a large amount of size. That's what sort of saves me from those types of tendencies, right? Small amount of size, that's really irrelevant. But yes, that is why we have a 94% loss on Tesla. I just wanted to ride it through that Robotaxi event. Now, let's go into like a legitimate loss. And you guys can see if I zoom in on this, you're going to see those actual trade losses, the ones that I actually am putting decent size into and large size into. Look at the percentages, right? This is right about where I want my loss to be. I don't want it to be much larger than that. If I'm going to put good size in a trade, right, you can see right here, I am going to make sure that I have at most, I want to try to target around that 20 to 25% loss. This, of course, is something I talked about in a previous video about the 10-22 rule, how much money I put in a trade, how much drawdown I allow it to be in. But there is a caveat to that 20%. It's very important about how those entries are. The entries have to be precise to really limit that percentage point loss. You can go check out that video. I'll put it on the top of the screen for you guys to see. but I think I did a very good job of following my rules this week with my losses. 20%, 19%, 14%. These are valid percentage point losses. I'm very happy to see that. So let's go ahead and talk about Costco. We'll talk about this one first. We'll break this one down and show you guys how I lost in this trade. Had about $14,000 in the trade, lost about 20%. This was a trade that I was looking for Costco to hold over the 880 level. You can see I entered here. I was giving it around that 880, 882 area, and you can see eventually I did stop out. I stuck to my plan, and I stopped out under 880. Now you can see, right, the rest of the day, Costco slid lower. So this would have been a 40, 50% loss if I did not take my loss. So this I am very happy with. You can see that 20% loss right around that 880 level, and I'll talk about the technicals in just a second. Unfortunately, the next day, the trade idea worked out and then some. I mean, look at this thing. It went straight up to 912 the next day. So that hurts a little bit. I remember talking to the group about how this trade hurt a little bit. This proves to me that I did have a good idea on the trade. It just was a little bit too early, and it looks like we needed a little bit more pullback before the trade did work out. But this is not something that we can look back at and say, well, next time, let me just go ahead and hold my trade. No, right? This is something I want to make very clear. And this brings up a great point. If I would have held this trade, right, I would have gotten bailed out and would have ended up making, I think, about 100% on this trade, which is crazy to think of. But that thought process right there is what creates bad habits. And this is so, so important. And I think something a lot of traders fall into is they look back at their trades. They say, well, if I would have held a little bit longer, or if I would have held into the next day, I would have been up 100%. That is not going to happen every time. The next time that you hold onto a loser and think about that next day upside move, the next time that happens and the next time you do that, we're going to gap down the next day. You're going to be down 100% and you're going to lose a lot of money, right? And so you can't just think that if Costco would have bailed me out this time, it's going to happen again next time. We have to keep some kind of static rule in our trading, and that is to take our losses when it is wrong in real time, right? If it's wrong, if it's not working, if it's under our stop loss, if it's under the structure that we're looking for it to hold, get out, right? Get out, take that loss, move on, find a new trade, find a new opportunity. Thinking back at Costco and saying, hey, if I would have held into the next day, I would have been up 100%. That thought process is going to ruin you, and it's going to cause a lot of problems long-term in your trading. So I'm very happy with what I did here, regardless of Costco going up the next day and contracts being up 100%. Let's go ahead and break down why I took that Costco trade. Let me talk through it and show you a little bit about what I was looking for at the time. So here is Costco on the 1-hour chart, and this was back on Monday of this week. So I'm going to go into actually the 15-minute chart. Let me get a little bit more time. And this was back on Monday of this week. And I think there was a very good reason as to why I was looking to take this trade. Right here, we had some previous lows at 880. We had some previous highs at 880, some previous highs at 880. And right here, Friday into Monday, look at what Costco did, right? It got above that 880 into Friday. It held above that 880. And on Monday, we started to see that upside push off 880. So I figured, hey, Costco previously was rejecting this level. We are now turning this into support alongside some market strength. I can look to see if I can long Costco off 880, targeting up into this 897 level. This was my trade idea right here. I'll go ahead and break this down on a shorter term time frame. Right here was my trade idea. It was a good risk reward, and that is why I would take this over and over again, regardless of the outcome here. If I go into the 5-minute chart, you guys can see we had these previous highs, and I'm actually going to go ahead and turn on the daily grayed out areas. We had some rejections, right? On Tuesday of 2 weeks ago, Wednesday, Thursday, multiple rejections at that 880 level. And look at Friday here, right? Friday holding 880, holding that as support, and Monday morning holding it as support very nicely. So when I saw that, I figured, hey, I can set up that long, stop loss under 880, and target that next move towards that 20 SMA. Very nice setup. Break and retest aligns with my strategy. Let me go ahead and take a shot. Now we can see, just like every other strategy out there, it does not always work, but this is where risk reward saves us. You can see Costco ended up failing that upside push, got under that 880, and I exited that trade for a 20% loss. It failed lower down back into these lows which was actually a nice demand low around that 870, which created that upside push. So I did try to look for that, sort of break and retest of key structure right here, looking for those previous highs to turn into new lows. It looks like Costco just needed to come back down to that 870 low once again. And then you can see clearly, like we talked about, that following day, Costco goes ahead and does the 880 break and retest. So let me go ahead and show you this real quick, which is very funny. Look at the next day, right? Look at the next day here. We had that 880 level that I set up my long off of right here, got stopped out on Monday, and then look what happened the next day. We got straight above that 880, pulled back to it, retest, and look at the long that set up. So quite interesting that I was just a day too early there. Would have loved to see Costco maintain that 880 on Monday for that push higher, but it looks like it did it the next day, and that's just trading, guys. That is trading. This, you chalk it up as a loss. You chalk it up. You take it on the chin. You own it. You say, hey, I was a little early. I took my loss. Let's move on. Let's find new trades. This right here is a fantastic example of just a trading loss. Right idea, right mindset. You can see it worked out the next day. So there was a reason to look for what I was looking for, but it just was a little bit too early, and I had to go ahead and cut that loss. This, I believe, was a good trade and a good loss. So that was last week. That was my first loss of last week. Let's go ahead and break down the next one. The next one was TSM. TSM, this was a swing trade that actually I believe I got some profits off. I got a very small amount of profits off from 350 to 375, but then this thing just absolutely tanked on me. So I was able to save this trade a little bit and minimize the loss by taking some profits, which was a small amount, but I believe that was a good idea. Ended up failing on me and sort of losing on this trade. It was, again, a 20% loss, $3,600. Had about $18,000 in the trade and managed to lose $3,000. Again, I believe great risk management, great risk reward on the trade idea, but it just didn't end up working out. So let me go ahead and show you what this trade was. This was, if I go to the executions, this was the 8th into the 9th. I entered on the 8th looking for a swing trade higher. I did exit some on the 9th, and then this thing just tanked on me on the 9th. So, guys, we're going to start this analysis on TSM on the 4-hour chart, and I was watching this $182 level. You guys can see right here, 182, right? Some major previous lows on that 4-hour chart. So I was looking to see if TSM can hold above that 182. Can we trade back up into that 190 plus? That is exactly what TSM ended up doing, but I just sort of got caught maybe a little bit too early to this trade once again. So this is the 8th right here where I entered, and this was the 9th. So I entered here on the 8th. I exited for a loss on the 9th, and I will show you now why that happened. So you can see right here, 182, that was that level I wanted to see TSM hold above, and it sure as hell did, right? 182, it held up both those days very strong off that 182 level. Should I have maybe just let that trade go to 182, right, and sort of give it that space, which would have ended up being a profitable trade? I should have, but the problem that I did on this trade was I did not have a good entry point. So I had to go ahead and minimize that loss. I didn't have a great entry point. I'll go back to that TradeZella, and you guys can see I sort of entered at the high of day towards that Tuesday. I believe that was Tuesday on the 8th. Yes, that was Tuesday. So I entered sort of toward high of day there. I planned on giving this trade to around $185 as my stop loss. I was looking to see if it could hold above 185 and continue higher. It did do this perfectly into the next day, but the following day it did fail on me. And once it got under that 185, I called it quits. I took my 20% loss. Of course, this is another trade that I look at and see, hey, my idea was right. It would have worked out, but I'm focused on keeping good discipline. Cutting trades that are not working for me, keeping it small, and riding the ones that are instantly working in my favor, right? The ones that I'm green on, and they're great, and they're working, riding those out for big percentage point, big dollar amount profits. The ones that are questionable and sort of working against me, cutting them short, cutting those losses. This is what has kept me profitable. This is very, very important. Now, if I would have had a better entry point, the game plan to hold until 182 was absolutely spot on, right? 182, previous lows. Look at how that 182 level held and pushed to the upside. That was beautiful. If I go to the 30-minute chart here, you guys can see not at one point last week did TSM break under this 182. Big demand Tuesday, big demand Wednesday, caused upside continuation. Beautiful, beautiful stuff. Now, the reason I was using 185 was because right here, let me go into the 15-minute chart. Let me go into that that Monday to Tuesday move. Take a look at this. This is what I was doing to structure my trade. Here was Monday's highs at 185. Let me show you this right here. So we had Monday's highs right here at 185. And we had a break and retest hold of that level on Tuesday. So what I did was, instead of waiting for an entry point down at 182, I said, okay, I'm going to try to set up an entry off this previous day high, and I'm going to use that as my stop loss. As long as it's above 185, I'm going to hold that trade for more upside. So I was watching this 185 previous day high. I entered with that idea of holding as long as it's above it, and we did hold that beautifully into end of day Tuesday, which let me swing trade that trade. You can see the next day we gapped up, and I thought this was going to be a beautiful little break and retest of previous day highs for more upside. Unfortunately, we got straight down off the open, which was just sort of unfortunate. But I did take some profits right at open, which I told the group I was going to do. I wanted to lock up some of that profit just in case this thing had to pull back. But this pulled back a little bit more aggressive than I would have liked, right? It got right under that 185. And as we were pushing back off that 182 demand, I just went ahead and I exited the trade. I did not want to get stuck in a trade that would then reject that 185, which was very possible, right? We fail back under 185, which was these highs. You bounce back up into it, you reject it, and you see more downside. That was absolutely a viable possibility. And because of that, I said, let me go ahead and minimize this loss to 20%. Let me cut it. This is not what I wanted to see. This was not part of the game plan, a straight down move in the morning, right? That's not part of my game plan. I don't like it. Doesn't make me comfortable. Cut the trade, right? So I wanted to see it hold above 185. I wanted to see that Monday high hold as a very key demand low and continue higher off that level. It looks like we needed to get a little bit lower towards that 182 demand, which ended up causing TSM to hit new highs over this 190 level, which is quite beautiful. And of course, this trade again would have worked out for me if I would have just held mindlessly and hoped for the best. But again, that causes bad habits. So that was the second loss. That was another 20% loss. And that was, those are the two really main losses of last week. You can see right here, TSM and Costco, both 20%. You guys can sort of hopefully understand my analysis behind the why of them, why I cut them. And really, I think the key thing to take away from here is how both of those trades still worked, because I believe the analysis was correct. Sometimes we were a little bit early. We're not quite perfect on timing, but that does not mean we create bad habits and just hope and pray. Hope and pray at times will bail you out, but I would say more than 50% of the time, it will not bail you out, and you will end up with net losses doing that, right? It will not be net profitable in the long term, hoping and praying. Cut that loss, move on, accept it, and that is why I make this video and own it and learn from it, right? And I hope you guys can learn from this as well in today's video. Now, with those bad trades out of the way, let's get into some of the good ones, man. Let's get into some of the juicy wins from last week. You guys can see those wins. The percentage points are much larger. 56%, 47, 46, 30. You can see that 23% win on NVIDIA, both those right there, right? Good percentage point wins. Profits are much larger. This is why this number right here is so important, and that profit factor number is so important. Very, very nice. Now, let's jump into some of the nice trades that we have from last week. So the first winning trade that we're going to review here is Broadcom. These were some 0 DTE, October 11th, 180 calls that I took. Had about 50% profit, put about $20,000 in it, and came out with about $9,600 in profit. Really nice percentage point win, and I really, really like this trade. This was just trusting levels, and that is what I love to do. And when it starts to work out for me, man, it just feels so nice to see that strategy and to see those levels just play out perfectly. This was actually, shout out Barrage and some of the other group members in the community. This was a trade that I was thinking about exiting for a loss, but we were sort of conversing in the group and pointing out key things to look for. And we were sort of, came to an agreement on the $177 level, and do not exit this trade until that 177 fails us. Look at this right here. That 177 4-hour triple top high. This is back from July 5th, July 8th, July 11th. You can see we had a very cleared previous triple top high on Broadcom. that we went ahead and broke above. And take a look at what that 177 level did this week, guys. Look at the beauty off this level. Look right here. 177, that previous triple top high. Look at that monster move there on Wednesday. And we came into the day looking for pullbacks on Broadcom. I was originally looking for pullbacks back towards this 181 level. It did get a little bit deeper, which I am okay with because we were sort of game planning for that 177. So we can see I was looking for this 181 originally to see if we can get sort of that breakdown, that retest long, right? Pull back to these highs, retest that level, find a new long on a little pullback long. But we also were looking at this 177. You can see these previous highs, that low right there from Wednesday, and look at how that low stepped up again on Friday. So I was entering this trade. You can see entering it sort of as we were sitting in this area down here, looking for that trade to push back to the upside. We can go into the 5-minute chart, and pretty much all I did, guys, was I entered near these lows, entering, sort of adding near these lows, trusting that 177 as my stop. And as we got those pushes to the upside, I was profit taking into this move. This was pretty much just trusting a previous 4-hour level. This is a break and retest once again. This is previous triple top at 177. This is a break and retest and a previous supply turning into some strong demand buying. Right here you can see we have that 15-minute chart. Look at how that previous triple top has now turned into a strong buying area. And so I trusted it once again, and it turned out to be a beautiful trade. That trade went for about 50%, about a $9,600 profit, scaling out into the pops on Broadcom as we got those contracts to increase. Very, very nice there on Broadcom, trusting the levels and trusting our analysis. The next winning trade that we're going to review here is Apple, and this thing was just an absolute pure beauty, man. It was perfect entry, really minimal drawdown, just grinding higher and just exiting as we got the win. I loved this trade. This was a beauty. And I actually did swing trade some of this. Look at this. Did I swing trade? Yes, I did. Look at right here. You can see this was my entry. Exits right here. Oh, one exit, 2, 3, 4, just scaling out, 5, and the last one, 6. This was a 46% trade, a $16,000 profit, had about $35,000 in it. This was an awesome trade off the Apple 225 and the 20 SMA. Here is why I took this trade. Let's go ahead and break this down. So here's Apple. Here's 225. 224.50 is what I was watching. Here was some lows. This is the 1-hour chart. Here are some lows. Here are some lows that developed. And right here on Tuesday and Wednesday, take a look at how Apple created this sort of straight down, straight up, a little bit of liquidity grab, right back and reclaim that 225. So I saw that liquidity grab come in on Apple. I saw us reclaim over that 224.50, 225. And guess what else I saw there, which you guys know I love the trade off of, and that is that 20 SMA. You can see this demand stepped up. This demand stepped up. That 20 SMA was holding us up. And if I go into the short-term time frames, what you're going to see here on that morning where I took this trade, you're going to see us drop aggressively down into that 20 SMA, right? And look at how this thing got bid up, right? This is right here on the 9th. So the 9th was, let me go ahead and make sure I know what day the 9th was. The 9th was Wednesday. So we can see on Wednesday, we had that drop down under that 20, stayed above that 224.50 demand, pushed back higher, and held that 20 SMA. And when I saw that, I figured what I can do here and how I can set this trade up. Let me go ahead and get more time to make this more clear. How I could set this trade up is very, very clear. I could trust the 20 SMA, and I can trust that downside demand. I could trust that Apple is going to try to hold above that 224.50, 225 zone, right? And I can just place my stop loss under that level because I believe that if we fail under this low, fail under this low, fail under some of these lows, then I probably should look to exit that trade, right? And so I was going to set up the long, stop loss under that 224.50 and see if we can get the push into that 227 and maybe even further. And that was right into that 229.50, which is gorgeous. And I started to take my profits around that 227 because I figured, hey, I hit my target. Let me go ahead and lock some profits up here. But I did hold some runners. And this is what I was referring to. If the trade is working for us, don't fully exit. Take some profits. Let some run. The runners here is what keeps my risk reward positive. I have to let these winners run to outweigh those losses that we talked about, right? That 20% loss on Costco, that 20% loss on TSM. I have to get more than 20% on this trade to outweigh those losses. And that is why I'm making sure if the trade's working for me, I'm going to scale out to protect myself, but I'm going to let some run. And you can see that that was a 46% trade that outweighs the losses. This trade alone outweighs both of those losses and then some. That's what you love to see. Apple, 225, beautiful 20 SMA. What a long. And this is actually a trade that I still have open. As long as we're over this 227, this is a different contract that I have, obviously. But I still like this idea. As long as Apple's over 227, I'm looking to see if this is structuring higher. So this week coming, I'm going to look to see if that 227 holds true. Guys, the last winning trade that I actually want to review because I think it really showcases the break and retest just quite beautifully is this QQQ trade right here. It was about a 30% win, $3,100. So I didn't have as much size in this because when I trade those market ETFs like the Qs or the SPY, I just sort of slow it down a little bit because I know how much volatility can come in. And I know if I'm trading a short-term expiration, which I was trading a 0 DTE, I want to make sure I'm a little bit more cautious, right? So I did scale down a little bit on this trade, but it ended up being beautiful, 30% win with very minimal drawdown. I can actually go down to this drawdown. Let's go ahead and see what this drawdown was on this trade. Drawdown was about $600, $500 to make $3,100. So that drawdown is beautiful. Love that. And this showcases the break and retest like no other trade. I want to show you why I took this trade. This was back on the 10th, and I'm going to just showcase the break and retest in all its glory. So this is the 10th right here. You guys probably know, which I hope you know if you've been watching my channel, how important the 491 level to me on the Qs has been. This is a previous high right here at 491, and this was a low from the day prior. Take a look at this right here. If we go to this right here, this is the 9th. Look at how that 491 held on all day on the 9th, all day on Wednesday, and kept that market higher over 491. So what did I look for the next day? I looked for us to pull back into that 491, hold it again just like we did the day prior, and see if that upside move would come in again, right? Can the history repeat itself off that 491 once again? Take a look at this market on, this is on the 10th. We had that straight down move down into 489.50, which again was also a break and retest. You can see right here, 489.50, 489.50, beautiful hold right there. I didn't take the trade off that. Where I took the trade was a reclaim back over 491, back over this hold level from the day prior, and as long as the Qs were above that 491, I wanted to stay long, looking for the upside push, just like the day prior, and that is exactly what we got. Now, this trade, I probably could have extended a little bit larger and held some more size for more profits, right? I took off half around this 493, went up a little bit higher. My target was 495, so I started to exit a little bit prematurely, but I think I got the meat and potatoes of this trade. You can see exiting at 374, 423 for about a 30% profit. Why did I take this trade? Why did I hold it? Why did I stay confident? Once again, it's all about the technical levels, guys. It's 491 right here, 491, hold, hold, hold. The next day we open higher. Can we pull back and hold that level again for another long opportunity, right? Can we hold that 491? That is exactly what we did. You can see right here. We had some chop, but we never broke the lows, right? And this is where a lot of people get a little bit scared. Do not get scared in this, guys. You got to enter this trade with a game plan, and you can't micromanage. If I'm going to long here over 491, I'm in this trade until it breaks down and stops me out. If it does not, I am holding strong, and I'm going to trust my analysis. Trusting my analysis and holding strong is what gets me this move, and I just want to showcase one more thing, and that is the next day, the exact same thing happened. Take a look at this on the 2-minute chart. Look at 491 on Friday to close this week. Here is 491 on Friday. Look at this trade that was available on Friday. 491 reclaim, hold it. As long as it's above it, you trust it. Bam, what a trade on Friday. That 491 setting up some beautiful trades last week. So guys, that's going to be it for today's video. Let me go back to that trade Zella. $86,000 total $76,000 realized last week. I showcased some of the winning trades. I showcased some of those losing trades. I hope a key thing that you got out of today's video was, if it ain't working, if it's sort of breaking down under your levels, if it's under your stop loss, take that loss, keep it small. Another trade will appear. You saw how I took those losses, but my wins heavily outweighed those losses, and this right here is what keeps us profitable. And maybe, just maybe, you watching this video can make something stick and make you remember this when you're trading on an intraday basis. I hope you enjoyed today's video. If you did, press that like button, subscribe to the channel, and I will see you guys in the next one. Peace.